Hello students, welcome back to my YouTube channel. Today we are back with the classroom experience again and we'll be starting with OCM chapter number 3 Business Services part 2. Before starting this chapter, we'll like to recognize what we have learned in Business Services part 1 chapter number 2. In chapter number first, we have discussed about the auxiliary services that a business needs, and the five main kind of auxiliary services were insurance, postal services, godowns, and transportation and banking. The first four, that is insurance, postal services, godown warehouses, and transportation, we have already studied in chapter number 2, that is the first part of business services. And now in this chapter, chapter number 3, part 2 of business services, we'll be studying with the last and major services that every business require, that is bank. So learning objectives that we'll be getting from this chapter will be bank. What is bank? When it was started, the first bank, how the word bank derived, what are the main functions of bank. Then next is functions of bank. List of functions, what are the functions or what are the things that we get from the banks, the main functions and the subsidiary functions of the bank. Then we'll be studying about types of bank account, different types of bank account related with different individuals or group of individuals or different business organizations. Then current day or modern day services provided by bank. What kind of services we take from bank? It is related to fund transfer, locker facilities, and n number of services that we take from banks. And last is the modern day scenario, the current scenario, that is e-banking and mobile banking. E-banking, mobile banking, ATM cards, debit cards, and all about plastic and digital cash. Okay. So today, starting with the first topic, bank. Now, what is bank? As per the layman language, any institution which does the function of bank, which does the functions related to money, is known as bank. Any institution which does the function related to money is known as bank. The first bank of the world was started in Geneva in the year 1407. The first bank was started in Geneva in the year 1407. The word bank is actually derived from an Italian word banco, in Italian word banco, which means to accept deposit or to receive money. And as per the definition of RBI, RBI is Reserve Bank of India. In India, all the banking related decisions or all the banking related regulatory decisions are taken by RBI, Reserve Bank of India. And as per Reserve Bank of India, that any institution which accept deposits, collect deposits, and lend or invest money and is registered under RBI Act is known as bank. Okay, so introduction to bank is first bank was started in Geneva in the year 1407. It is derived from an Italian word known as Italian word banco, which means to accept or receive money. And as per the RBI, any organization or institution which does the monetary functions or which deals with the money is known as bank. Now, talking about the function of banks. In traditional time, the two major functions of bank were to accept deposit, that is to receive money, and to invest or lend money that they have received or accepted. The traditional functions are to accept deposit, that's to take money from the one who wants to save the money, who wants to deposit the money to the into the bank, and to invest or lend money. So these were the two traditional methods which are still going on, which are the core functions of bank. But as per the present day or as per the current scenario, if we want to list out the functions that are done by the bank system or banking scenario, the list is endless. So core function is still to accept deposit and to lend or invest money or the funds remaining with the banks, to invest the funds remaining with the banks, or to lend money to the needy or to the one who needs. But if we want to list out the function today also, the list is endless with the core function remaining same. Okay, students. So let us continue with the next topic. Next topic is function of bank. Now, talking about function of bank, the current day functions of bank are divided into two parts. That is main function and subsidiary function. Main function, we can say the core function of bank, the functions for which banks are known, and the functions which were into the banking system from the traditional era. And the subsidiary functions are the functions which supports the bank, which are also being provided by only the banking institutions, but are subsidiary which means which are not necessary for every individual customer of the bank to take the services of subsidiary functions. Now talking about main functions, the main functions of a banking institution or banks are divided into four parts. The first one is to accept or collect deposit. Second one is to lend money, that is to provide or invest money. Third one is to invest, and fourth one is to do interbanking transaction related with the banks. Okay. Now let us see with to accept or collect deposit. First thing is to accept or collect deposit. As we all know, the main or the core function of banking institution is to accept or collect deposit or to take the deposit or savings or surplus of the customers of it. Customers can be individuals with a saving bank account, business concern, group of individuals, association of person, and many other government bodies, etc. So on. So the first function is to accept and collect deposit. And the plus point with this or the advantages with the first function is whatever amount you have deposited with the bank, whatever amount we have deposited with the bank, generally bank pays interest to the deposit holder. So it is a always win-win situation. First, our money is safe in the hands of the bank. Our savings or our surplus amount is safe in the hands of the bank. Plus, we are earning a money on the rest. We are earning on the we are earning the money on the surplus or on the savings. So our money is growing. Our money is increasing. Although in the current day scenario, the rate of interest and the pace of growing of money can differ from bank to bank and can differ from situation to situation. But yes, on some of the deposited, on different types of deposited, bank allows or bank pays interest to the deposit holder. Okay. Now, the major concern that nowadays are going on or is related with the accept or collect deposit is of trust. Now, how to maintain trust? So, the biggest responsibility of a bank to manage with the accept or collect deposit is to maintain the trust. To if the trust level is higher with a particular bank, we can will be saying that the amount of deposited, the amount collected by the bank is higher. Okay. To accept and collect deposited, bank generally allows four type of deposits account. Generally, bank offers four type of deposit account. First one is saving bank account, which is for normal individuals, which can be opened from a children with or a minor with parents' guidelines or guardians' guidelines up to the senior citizens. So saving bank is generally for saving purposes that we have the amount of surplus that we are having to safeguard it with the bank and grow the let the money grow. So first account is saving bank account. Second type of account is current account. Second type of account is current account. Generally, on saving bank accounts, banks do provide interest to the deposit holder, and the interest ranging is from 3.5% up to 6%. Earlier, it was 3.5% to 4%, but in the current era of competition, different private sector banks are providing interest up to 6% per annum. And but in current account, second type of account is current account. Current account is generally an account for business transaction, an account opened in the name of business institution for business transaction. In saving account, we have different types of limits associated with it, but in current account, we do not have any kind of limits of transaction or number of limits regarding the number of transaction. But the loophole over here is that in current account holders or in current account bank do not provide interest to the deposit holder. Instead of interest, bank increases the number of services provided. Third account is recurring deposit account. Third account is recurring account. Recurring account means an account in which the depositor or the one who is saving the money has to deposit, has to invest same amount at same fixed date every month. That account is known as recurring deposit, and bank adds on to the interest to the same amount. And fourth one is term deposit amount. Term deposit is popularly known as fixed deposit (FD). We already know about the FD, or we have heard somewhere about the FD. So fourth one is term deposit account. So these are the four types of accounts that generally banks offer: saving account, current account, recurring account, and term deposit is fixed deposit account. Now moving on to next function. Next function of the bank is to lend money. Now question is, if the bank is accepting deposit, providing us the interest, then what is the bank doing of that all money? So bank provide that money, bank provide that surplus amount of money to the uh, account holders or to the customers who are in need and who are ready to pay higher rate of interest than the bank is providing us on deposits. So next function is to lend money. Now talking about of lend money, the bank lends money to the needful after a proper security check, after a proper credit worthiness, after the checking of credit worthiness and goodwill of the account holder or the customer, and bank lends the money in two ways. Generally, banks have number of ways to lend the money. But the two popular types of lending tools. First one is through a loan. Through a loan. Loan means bank will provide a surplus or lump sum amount of money at the beginning and will take or will ask the customer to repay it in small installments known as EMIs. In that, bank will be charging a higher amount of interest rate. And generally, a loan is from ranging from 1 year, 3 year, 5 year, or it ranges up to 20-25 years. So first lending tool is through loan. Loan can be of many types. It can be home loan, vehicle loan, mortgage loan, gold loan. That we'll see in further topics. And the another way is of lending money is through overdraft and cash credit. Another way of lending money is through overdraft and cash credit. Cash credit, overdraft and cash credit. Overdraft is generally for current account holders only. Overdraft is generally for current account holders, the businessmen who are in requirement of liquidity or who are in requirement of hard cash for a shorter period of time. Generally opt for overdraft. What is overdraft facility? Overdraft facility is facility in which bank allows the customer to withdraw money more than the amount deposited in the account. For example, if I'm having a business account, business current account with the bank, I am having a 10,000 rupees of account amount in the current account of mine, but I need a 15,000. So if I opt for overdraft facility, bank will allow me to withdraw 5,000 more depending on my credit worthiness, depending on my goodwill, depending on my previous past transactions. So that is overdraft. Overdraft is generally for 7 to 14 days. And the limit for overdraft is depend from bank to bank, and it is dependent or it is wholly dependent from bank, and they have independent criteria for depending deciding the overdraft credit limit of a particular current account. And overdraft we have for a shorter period of time. Now talking about cash credit. Cash credit is same as overdraft. The only difference between overdraft and cash credit is for overdraft we do not have a fixed period of time. Overdraft can be for 1 day, 2 day, for 5 days, 10 days, 15 days, a month. It depends on bank to bank, and we do not have a definite period for definite time period or definite tenure for overdraft. But for cash credit, we have a definite time period. When the cash credit is allowed, when the money is lended through cash credit, it is pre-decided in the beginning while allowing the loan or while lending the money. Cash credit can be for 5 days, 7 days, 14 days. It is also a shorter period of type of loan. So cash credit we have a designated time period. Overdraft we do not have a designated time period attached to it. So students, in today's video, we have covered about the learning objectives from this chapter, a brief introduction about banks, when it was first started, and what is the when it from where the word bank derived, the functions of the bank, traditional functions, present day functions, and the functions which are divided into main functions and subsidiary functions. And out of the main functions, we have covered 2 points, that is to accept and collect deposit and to lend money. The remaining 2 points with the subsidiary functions and the further chapter will continue in the next part of the video. Till then, go through the video properly, stay home, stay safe, happy learning.